What's going on, Gold Mines family? It's your boy here, the Gold Father. Just wanted to complete and give you this US30 video that everybody's been so excited and just can't stop thinking about it, right? Everyone's talking about the US30 video. I released chapter one, part one, about 2 months ago, but a lot of people have seen it recently and the results that people are getting are amazing, okay? So really quick, before we just start this, trading does require risk. Don't risk any money you can't afford to lose. This is not investment advice. This is just solely for educational purposes only. And you don't have to do this strategy if you don't want to, right? You could tweak it to your own way, whatever works for you. But this is just the way that I use it. So there's two pairs that I use this for. So I use this for XAU and I use this for US30. The time sequence strategy that I'm showing you right now in particular is going to be used for US30 solely. And then we will get into the OO and such after, okay? So let me jump into US30. All right. As you can see, my chart's already marked up. So on this strategy, right, you're almost like a photographer, right? And what is a photographer's job? A photographer's job is to capture the beautiful moments when they happen, right? It's just natural moments, right? Whether it's somebody backflipping, it's somebody running in the street, it's somebody double dutching, whatever it may be, they're capturing that moment. Your job, right, when you're using this strategy is to capture the volatility that is happening at that moment, at that specific time. So 15 o'clock, okay, is the strategy that we're gonna be using. Okay, let's start with here. This is actually a good one. Okay, so right here we see 15. Okay, price has to break the high or low of this candle. So whether it's for a buy or whether it's for a sell. However, it's not just breaking the high or breaking the low. Okay, you have to look at the market structure as well. You have to take the market structure into consideration, and you always want to look at the next support or the next resistance zone that is there, right? Those are the rules of the strategy, okay? It's not just break high or low, okay? So we see that this is the 15 o'clock, okay? So price shot down to this level and it came up and closed here. So what we're going to want to do is we're going to put a horizontal line at this level, okay? All right, we're going to put a horizontal line at this level. And this is the 15 o'clock, okay? So price has to break the high of this candle or the low of this candle, right? This is the high, all right? And we see a little bit broken, but we're obviously not going to enter in right there just because this little tab, okay? Now, look on the upside of this. The upside of this is a resistance level. So if it does go up for a buy, we could buy here. However, it'll be a little bit risky, right? Because the distance from here to here is a little bit further, okay? Now, on this end, okay, let's say for example, this was the 15 and we were selling down to this level, it would be a little bit more highly probable, right? If we sold down to this level because it's much more closer. The closer it is, the higher probability chance that you do have of winning, okay, to the next support. Because it's like if I stood far away from a river, right, and I threw a rock, it may be harder for me to land that rock inside the river versus if I was very close to the river and I threw the rock, the probability of the rock going to the river is a higher chance. So always take that into consideration when you're trading the 15 on the breakout for the high or the low, okay? So in this particular case, we see that the 15 ended up closing. It shot down, it closed here, and we want to make sure it doesn't break. We want to make sure it breaks the high or low. So second candle doesn't happen, nothing happens, nothing happens, nothing happens, nothing happens. And finally here, price breaks. Price breaks. So people say, oh, well, isn't it supposed to happen right after the 15? There's different scenarios that happen in the market. So sometimes it'll happen right after the 15, the close of the 15 and the 16 happens, or it'll take hours to play out. But no matter what, the fact that price is in this range, it still has to break the high or low of the 15. So here it broke the low of the 15. Where is our next support level? Our next support level is technically here, right? But why? Because this is support here, this is support here, and this is, upcoming support, okay? But there's also another support level. The support level is also here, okay? So this is the 15 o'clock. This is the 15. Price came and it broke out here. So we could take it to this level. Our first trade could be boom, to this level. 64 points, right? From here to here. Our second trade, from this level to this level, okay? 139 ticks, okay? So you got 67 ticks and 139 ticks from here to here. Altogether, over 200 ticks within this move. Now, when this happens, you would take a sell and take profit here because this is the next support. Then where would we sell again? Then we might want to sell right underneath here of this wick because this is the next support, so we want to wait. All right? And then you could sell here. Okay? My stop loss, take profit here. My stop loss at this point would be right above my entry right here. Okay? Because this is the 15, but this is my entry, right? My stop loss would be here. My stop loss, let's make that red. That's my stop loss. Here's my entry. Make the entry green. Okay? And here's my take profit, blue. All right? So my stop loss, my entry, and my take profit is here. Okay? My re-entry is going to be below here, and I could take profit here. I'm going to give you another example so you guys can see. Okay? We see this is the 00 where price has to break the high or low, but we're going to get into that momentarily. Okay? This is the 15 o'clock from a few days ago. Okay? So here's the 15. Okay? Price has to break the high or low of the 15 o'clock. Oops. That was stupid of me to do. Horizontal line. Okay? Price has to break the high or low of here. So then we see this is the high or low. Boom. Okay? Where are we trading the next price to? Where's our take profit? Our take profit is here. Why is our take profit here? Because remember, we're closer to the river, so we could take profit here. The reason why we could take profit here as well and not have to worry about, oh, that was only a little bit of points, is because US30 is so volatile that even the smallest move, even a very small move, can get us high gains, okay? So we see right here, and over 110 ticks happen just from this support. I like to trade 50% of the wick. I don't just trade right onto the support because price could easily just, stop 50% of the way. Like it could stop right here 50% of the way and then go up. You never know. So because I don't take the market for granted, and I know that the market could do whatever it wants, I'm not in control of the market, I put my take profit 50% of the wick. And then I put my stop loss probably somewhere around here, okay? And then we see price came and it broke out, all right? So my stop loss would be somewhere around here to here. My entry would be here. My take profit would be here, okay? So boom, boom. We got another 15 o'clock, okay? Another 15 o'clock we want to take. 15 time period. Okay, 15, look at that. At the 15 o'clock, we see that there's consolidation, right? So look at this level real quick. Let's take a second to look at this level, okay? Right here, we see a lot of consolidation. When we see a bunch of consolidation orders like this, it's basically an accumulation order, right? It's where a lot of the volatility is actually happening because buyers and sellers are fighting for price constantly. So we're gonna see a lot of the volume is it's like condensed, right? It's all together, boom, 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 boom. It just keeps going back and forth within this range. So when indecision happens, it's a great way to capitalize because we have to wait for the decision to happen. And if we're trading on the 15 o'clock, we know that there's a volatile move that is going to happen at that time, which means that the decision is going to be there, right? The volatility is going to be there. So 15 o'clock is coming, right? And it's in consolidation. We know price has to break out of consolidation for a buy or sell. So we know, okay, we're going to wait until it closes below, above or below. And look at the way price is forming. Look at the behavior of the candlesticks. Okay, look at the behavior of the candlesticks. Okay, this is the highest part. This is the second highest part right here. Let's just zoom in. Okay, zoom in right here. Boom. Boom. Okay, right here we see the volatility, right, is consolidating. Now, a lot of people don't look at the candle. They don't zoom into the chart. It's like if somebody's taking a picture of you for your ID or your photo, notice that they're always going to zoom into the shot. They're going to make sure people can see who you are, who you say you are. And most importantly, they're doing their job. So are you doing your job by zooming into the chart to actually look at the behavioral patterns of the candlesticks? Are you actually understanding in depth like how the candlesticks are moving? The body size of the candlesticks, where it moved, how it moved, all those questions are very important. So on the 15 o'clock, which is here, price got to break the high or low. Before, in the past, if we do this, okay, before in the past, price came down from 2464 to 24606 to this level. So we could see that price is itching down. Price is getting lower, right? So we know that, okay, you know what, this could possibly be a downtrend, all right? If it goes up, then obviously the potential of it going up is still there. However, our support is here. So we have a closer chance of winning because our support is closer. Where this is a little bit different because it's further away. It's the distance of it, okay? So the distance here is closer, and we're gonna see what happens. Nothing happens, price doesn't break. Right here we see, and the order doesn't happen right away. It may happen a few hours from now, but it happens. And this is something that you kind of have to monitor too. So we see 24474, price breaks from that 15, right? And then we see 126 points, take profit. 126 points, right? 50% of the wick. 50% of the wick. Boom, 50%. Right there. We don't want to do it right at the bottom. We always want to do 50% because we don't know what the market will or will not do, okay? And then boom, look at that. It came back up. And that's why we do 50%. See, it came back up and then it tanked. But overall, look how many points it went down from the 15. 260 pips. And I put my stop loss right on top of the 15 o'clock candlestick too. And people are like, oh, why would you put your stop loss there? That's probably people's main question, right? Why would I put my stop loss at this level? I'll put my stop loss at this level right here at the 15 o'clock, even though I'm entering down here, because we know that if price breaks out of here, right, breaks out of this level, I'll probably put it right here, to be honest, right here on the last wick. If price breaks out of this level, then it'll be going in the opposite direction. So we're just getting out in time just in case it breaks. Right before it breaks, we're getting out. Okay, that's why we're not putting our stop loss so high or too low. We're putting it like just in the right spot. Okay, so that's for the 15 o'clock. I'm gonna give you guys another example too. Okay, and you wanna do more like in detailed examples as well. Like here's a 15, it's a beautiful one that we see. And you guys can go back and back test this for yourself, okay? We see 15 o'clock, where is it, right here? Oops, 15 o'clock, right? You wanna make sure your time is set also to UTC time, okay? So I'm in New York, so my time is New York time. I look at it New York time, but it still pops up UTC. And we see the 15 o'clock candle right here, has to break the high or low. Okay, I'm entering right after the 16 comes. We see the 17, and this one's really good because we could actually trade it Right there, I did that horizontal ray again. We could actually trade it right to where this gap was, right? Which is even further down, right? But we want to do, you could do two entries. You could do a double entry as well, okay? Which our first entry could be here, and we want to look to our left. What do we see to our left? On our left, that we see that there was a lot of volatility in this area, right? Price came and broke through this area, but there's still volatility coming back to this level. Still price coming back to this level. Still price coming back to this level. Look at that, price still touching this level. So there's something significant about this level here, okay? And that's why I'm gonna take profit on it. So 115 breaks out right below this consolidation. Also look to your left here, right? You see this consolidation right here? 15 o'clock is right here. You also want to be careful because there's support here just in case. So what you could do is you could do maybe 50% of the wick right here, right? 50% right here of this wick. Okay, and then we see price comes and then it hits. And that's 131 ticks. Now let's say you want to do your take profit here, which is completely reasonable. I would do my take profit 50%, even though I know it sounds like I'm contradicting myself because I said, oh, with the, you know, closer to a river analogy, etc., etc. Here is a gap, and then 50% of this in the middle is just perfect because it's just breaking from going down and then also breaking and going up. So I think 50% is right here. It's at the resistance and it's at the somewhat of support, right? So that's why I do the 50% of this wick. And look at that, 314 ticks. 314 ticks. That's why I would do it from here to here, okay? So I hope that makes sense to you guys. I'll do one more. Look at that, 15 o'clock. I mean, you could see that it's pretty accurate, right? All right, and then you could also, this is the 15, right? So price came and it broke, all right? Right here's your take profit. So here you would have been almost, your stop loss probably would have, your entry would have got hit. Like let's say you wanted to take it up to this level, but now looking at this level for me is too close. Like it's too close in my opinion. Like it's too close. So it could be acting as a level of resistance. Does that make sense? And it's just too close for comfort. So this one I want it to be a little bit further away. If it was a little bit further away, then I can say, oh, you know what, price has a point to reject and get out. So you have to ask yourself, is it worth it? Are these little pips worth it? This little move right here just worth it? No. So we want to wait. Let's wait. And then also, when you see sometimes like this, you may be unsure because you see that resistance level right here. You could jump right into the 15 o'clock, and then you go to the 4 hour and look at it from a 4 hour perspective. And then you could get the real trend, which is going down, right? So on the 1 hour, you can go back and look at the 1 hour and see how it formed. And look how many ticks it moved, 915 ticks. Go back here. Okay. Boom, right here. Okay, boom, 15, 14, sorry, 15 right here. We see that, you know, all of this played out and within the 4 hour time frame. But we see price came here at the 15, and our next take profit could be right here. We could do it right here, or we could do it right here because this is the next support. I would do it 50% right here because this is the cross before resistance, okay? And then also this is support here, so we get it pretty close. So price breaks out of that 15 o'clock. I'm sorry, here is the entry, right? I do it right here, right below the break of this wick. Why? Because this is a quick support. So I would wait for the 15 to come and then I'd take profit right here, 50%. I'm good with that. Boom, price shoots down. 243 ticks. Okay, and it even comes down here, look. It moves ticks, guys. So this strategy really works. It's a very simple strategy, and sometimes the most simple things are the most brilliant things, and a lot of people don't realize that. A lot of people you know, they pay people for these courses of all these other different things that people believe will work, and sometimes they do, a lot of times they don't. But I figured that I would give you some value by showing you how this works and how simple it is. And I'll be also releasing a video after this to show you like a risk management plan that you could use in order to trade this on US30, and also a good compound plan for you guys as well. So that's it for my video. I will be releasing a part 2 for the S&P 500, and I will be releasing also the OO, the remake of the OO after this on Monday. But I just wanted to let you guys see how I trade this 15 o'clock, and hopefully this video does work for you. If it does, subscribe to my channel, leave a comment underneath of how this video has helped you or what you think of this video, and follow me on Instagram at thegoldfather_. I'll just put it in for you guys real quick so we see. I'm using my friend's computer right now. Boom. Follow me on Instagram. Taking forever to load up, but you see it. It's the Goldfather_. That's me. Appreciate you guys. And hey, have fun on US30. And remember, we're not about drama, we're about commas. Gold mine.